Good morning, FAC2602 students. Welcome to the first lesson of 2023. I wish you all the best for this year, especially on the academic front. And for those of you who will be writing the supplementary examination on the 23rd of January, I hope you guys have started preparing for that exam paper. And I hope that you are using the lessons that I have uploaded last year as part of your preparation. Right, so today's lesson will cover question 3 of the October 2022 examination. So this question paper was written on the 24th of October 2022. As most of you should remember, that was not a very good exam session, but hopefully a similar situation will not be encountered on the 23rd. All right, you guys should be writing at 12 p.m. as I've also indicated in my latest announcement on Google Classroom. So we are finishing the October 2022 examination today. This question paper also had a theory-based question, that being question 4. Now, question 4 addresses the integrated reporting framework that is addressed in Learning Unit 11. So please go have a look at that learning unit and prepare for a question that covers that learning unit. As far as I can recall, there were only 2 question papers that had a question regarding the integrated reporting framework. So please make sure that you at least read through that learning unit before you write on the 23rd of January. As you can see, the theory-based question only counted 4 marks, so do not focus too much on Learning Unit 11. I suggest that you rather focus on the pro forma consolidation journal entries as well as the group financial statements, because those will contribute the most marks, as well as the statement of cash flows that we are covering today. Now, today's question will use the direct method for this statement of cash flows. And according to our required section, only 2 sections need to be drafted. Firstly, we need to draft the cash flows from operating activities. Now, this is the most popular section that they ask in a cash flow statement question or a statement of cash flows question. Okay, so please make sure that you are familiar with the operating activity section, which items are included in that section, and when or what items need to be shown as an outflow and what items will be shown as an inflow of cash. Make sure that you are able to apply both the direct and indirect method. I have uploaded a lesson on Google Classroom where I have used both methods for the same question. However, for this lesson, I will be using the direct method as requested in the required section. All right, so the operating activity section is very important. Okay, the one that is mostly asked in this type of question. And then the second one that they also can ask you to draft is the investing activities section. So focusing on your non-current assets, specifically referring to property, plant, and equipment. Okay, in this section, we'll be dealing with disposal of property, plant, and equipment, that being the amount that was received on disposal. We will also have a look at additions to production capacity, specifically making a distinction between maintaining production capacity and expanding production capacity. It's very important that you show these 2 investments separately in the investing activities section. Right, the company that we are busy with is MCOP Limited, and it is for the year ended 30 September 2022. Before we start any question, we just need to indicate our current financial year. However, for a statement of cash flows question, that is not vital. It is rather important in your group financial statement questions, as well as pro forma consolidation journal entry questions. All right, but however, for the statement of cash flows question, that is not of great importance. But you can still make the note. So if the year has ended on the 30th of September 2022, the year should have started on the 1st of October 2021. So the beginning of the current financial year is 1 October 2021, and it ends on the 30th of September 2022. So in the examination on the 23rd of January, please make sure that you only draft the sections that are stated in the required section. However, for this lesson, I will be drafting the entire statement of cash flows using the direct method. Right, and because I am going to draft the entire statement of cash flows, I will show you the technique that I follow in this type of question. Okay, when drafting the entire statement of cash flows, you will see, as I've also indicated in previous lessons, that I start at the bottom of the statement of cash flows, because that will help us determine at which amount we must arrive when the entire statement of cash flows has been drafted. All right, let me show you how this is done. Now, before we start reading the additional information that elaborates on the cash flows for the current year, we first need to look at the change in cash and cash equivalents. So we will take the closing balance for cash and cash equivalents and subtract the opening balance for that item. The result will be the change in cash and cash equivalents. Keep in mind that there can be a bank overdraft balance, which we must take into account where it is applicable. In this question, there was no bank overdraft balance, so therefore we only focus on the cash and cash equivalents item that is shown under current assets in the statement of financial position. So we will only focus on this item right here in order to calculate the change in cash and cash equivalents. However, if you had, for example, a closing balance for bank overdraft, let's say 100,000, okay, you would need to subtract that amount from the given cash and cash equivalents balance in order to calculate the net value of cash and cash equivalents. So what I'm trying to say here is that it's very important for you to look at your statement of financial position and to determine whether there is a bank overdraft balance that needs to be taken into account when calculating the change in cash and cash equivalents. For this question, however, that is not applicable. Right, so if we look at our cash and cash equivalents line item, as shown under current assets, we have a closing balance of 2.1 million. As you should also notice, the latest year or the current year's figures are always given first. So this first column will represent the closing balance for each item, whereas the last column or the second column will represent the closing balances of the previous year. And logically, the closing balances of the previous year will form the opening balances for the current financial year. So these balances are as at the 1st of October 2021, just carried down from the end of the previous year, which was on the 30th of September 2021. Alright, so we have a closing balance of 2.1 million. As I've said, there is no bank overdraft balance that we need to take into account. So on your statement of cash flows at the bottom section, you will indicate that the cash and cash equivalents at the end of the current year amounts to 2.1 million rand. Not 210,000, 2.1 million. All right. And as with any other question, once you have entered a certain amount, you could just cross it out because it then indicates that you have already considered that amount in your calculations or as part of your final answers. All right. So we have a closing balance of 2.1 million rand, and then we had an opening balance of 800,000. Okay, both are favorable balances. So the change in cash and cash equivalents, or the net increase or decrease in cash and cash equivalents, as I've indicated previously, is calculated by taking the closing balance of 2.1 million and subtracting the balance at the beginning of the year, which was 800,000. So this should give you a value of 1.3 million rand. So in other words, the net increase in cash and cash equivalents amounts to 1.3 million rand. So once you have drafted every section in the statement of cash flows, the sum of the three sections, or the sum of the amounts for the three sections, so that being this amount right here, this amount, and this amount, right? Those three together should give you 1.3 million rand, or a net result of 1.3 million. Okay, otherwise you have made a mistake in your calculations. Right. So before you start reading the additional information, rather start with the bottom section to determine the amount that you should arrive at once you have done drafting the statement of cash flows. Okay, keep in mind, in this exam paper, they only requested the first two sections. Right, so you didn't need to draft this section. For this lesson, however, we will be drafting the entire statement of cash flows according to the direct method. Right, so we are done with cash and cash equivalents. We have calculated the change. As I've said, no bank overdraft balance that we need to consider in calculating that change. So we can start reading additional information point 1, which says the following. Now, property, plant and equipment, which is shown under non-current assets, right, in the statement of financial position right here, comprises of the following balances. So these two balances in the statement of financial position are made up of different components. And those components are given in additional information point 1. It consists of land firstly land, and secondly we have plant and machinery. And those two together should logically give you the gross total of 6,791,000 as reflected in the statement of financial position. So we can cross this amount out, or this line item out, because these amounts have been given in additional information point 1. So we can only focus on additional information point 1. Now, for the statement of cash flows question, it is very important for you to be familiar with your general ledger accounts, because your general ledger accounts will help you to determine the correct amount of cash flows that occurred for a certain item. So please make sure that you are able to draft these accounts. So let's start with the general ledger account for land. All right. So let us make a general ledger account for land. All right. Just give a moment for Excel to respond. So in terms of the company's land, okay, or immovable property, we had an opening balance. So the balance as at the 1st of October 2021 of 1,270,000. So we will enter that amount accordingly as the opening balance for land. Remember that land is a non-current asset and our assets will have debit balances, right? So the opening balance is given on the debit side, as you should already be familiar with. So this is the opening balance for land, okay, carried down from the previous year. And then we had a closing balance of 5,518,000, also on the debit side. Okay, 5,518,000. Okay, let me just correct that. This was the closing balance. And keep in mind, because it is the closing balance, it was carried down from the credit side. Okay, that's why I say it's important for you to actually understand how a general ledger account functions. And you should already be familiar with that from your Financial Accounting 1 modules. Okay, so this was the balance carried down or carried over to the debit side. All right. Okay. Now, we need to determine whether there are any items that affect land. And when it comes to land, we need to look specifically for revaluation surplus. Was there a revaluation during the current year that caused the value of land to increase? Remember, normally from FAC2601, you will recall that land is usually measured according to the revaluation model. So in other words, we measure land at fair value. And when there is a fair value adjustment, we make use of an item called revaluation surplus. All right. So where do we look for revaluation surplus? If it's not given in the information, okay, that being under additional information, it should be given in the statement of profit or loss and other comprehensive income, which is usually an extract given as part of your information. And you will notice that beneath the statement of financial position, there is an extract from the statement of profit or loss and other comprehensive income. All right. Now, according to this extract, there was no other comprehensive income for the current year. All right. That is according to your statement of profit or loss and other comprehensive income. But remember that this is only an extract. It is not the entire statement of profit or loss and other comprehensive income. So we cannot eliminate the fact that there was no revaluation surplus in the current year. So that is just the first step that you take in determining whether there was a revaluation in the current year. All right. If it's not given under additional information, you first need to look at the extract from the statement of profit or loss and other comprehensive income. All right. However, if the other comprehensive income section has not been provided in that extract, we need to look at our statement of financial position, specifically focusing on other components of equity. All right. Because other components of equity would normally include revaluation surplus. And in the absence of any further information, we can assume that other components of equity only consist of revaluation surplus. All right. So according to this extract, there was no revaluation surplus. Okay, but we cannot say it for certain. We need final confirmation by looking at our statement of financial position. If there was a change in the value or the balance of other components of equity, so comparing the closing balance with the opening balance, if those two balances are different, it means that there was a revaluation conducted within the current financial year. All right. And if we look at our equity and liability section, all right, specifically focusing on other components of equity, and in the absence of any further information, we can assume that this line item only consists of revaluation surplus. All right. If you look closely, there was indeed a change in the value of other components of equity, because the opening balance was 625,000 and the closing balance is 875,000. So there was an increase in other components of equity in the form of revaluation surplus. So therefore, there was a revaluation conducted within the current year that caused an increase in the fair value of land. And this value would be shown in the debit or on the debit side of the land general ledger account. Okay. And the value of the current year's revaluation surplus is just calculated as the difference between the 875 and the 625. All right. So let us calculate that amount. So 875, which is the closing balance for other components of equity, which we assume only consists of revaluation surplus. And the opening balance was 625. All right. So this means that the current year's revaluation surplus amounted to 250,000. All right. And as I've indicated previously, this would be shown on the debit side of the land general ledger account because it represents an increase in the fair value of land. All right. So this is revaluation surplus for the current year. So the journal entry that was made in order to record this adjustment was that we have debited land by 250,000 and we have credited revaluation surplus by the same amount. And as we should know, revaluation surplus forms part of other components of equity. All right. So just to recap what I've explained, when it comes to your land general ledger account, we need to determine whether there was a revaluation conducted in the current year that caused the fair value of the land to change. All right. The first place that we look is under additional information. There is no indication that there was a revaluation surplus for the current year. The second place that we look at will be the statement of profit or loss and other comprehensive income. The other comprehensive income section has been excluded, so we cannot say for certain that there was no revaluation surplus. So the place of final confirmation would be your other components of equity line item under equity and liabilities. If there was a change in the balance for that line item, it represents revaluation surplus that was conducted or that was gained in the current financial year. Right, how do we know that it was in the current year? Because we are only working with the closing and opening balances for this year. All right. And since we are done with other components of equity, we could just cross it out. All right. Now, apart from the revaluation surplus, okay, there should be an acquisition of land or expansion of land. So the balancing figure right here will give you the value of land that was purchased during the year. And that information is provided in additional information point 2. Remember, it is also possible that a portion of land was sold during the year. You need to look at your additional information to determine which cash flows occurred. Now, you will find the information in point 2, which says the following. Now, 6 months into the financial year, so halfway through the financial year, 80% of the loan was repaid. Okay, so let's first deal with that. All right. If we look at our non-current liabilities, we had long-term borrowings amounting to 1.15 million rand at the beginning of this year. Okay, and 6 months into the year, 80% of that amount was settled. All right, and because it was settled, we know that it represents an outflow of cash. So we need to show this cash flow in the financing activity section because it relates to a settlement of long-term borrowings. All right. So in your financing activity section, you need to show the repayment of loans as 80% of the balance that was outstanding at the beginning of the year. Right. You cannot consider the closing balance because that is as at the end of the year. All right. In order to determine the cash flow that occurred, you need to consider the opening balance because 80% of the opening balance was repaid halfway through the financial year. And the value of that is calculated as follows. So 80% of 1.15 million will give you 920,000. And because this represents an outflow of cash, you will need to show this as a negative amount in your statement of cash flows in the first column. Because the second columns will consider the totals for each section. All right, so of this balance outstanding, 920,000 has been settled. All right, so we have taken that into account. And subsequent to this, a new loan was acquired to fund the acquisition of land. All right, so what this means is that we have started with 1.15 million at the beginning of the year. All right, then we repaid 80% of that loan, so 20% logically remained. And then we acquired an additional loan in order to fund the acquisition of additional land. All right, so what this means is once we subtract 920,000 from the opening balance, all right, and we add the amount that was used or obtained to acquire new land, we should arrive at the closing balance of 4,578,000. All right, so we need to calculate the value of the additional land that was acquired or obtained in order to fund the acquisition of land. And this is calculated as follows. So the proceeds from long-term borrowings will be calculated by taking the closing balance of 4,578,000. All right. We will add back the repayment of 920,000 because remember we are working backwards in order to calculate the additional loan acquired. So we are adding back the 920,000 that was repaid halfway through the year, and then we will subtract the opening balance of 1,150,000. All right, this one should give you the amount that was acquired or the additional loan that was acquired during the year, and you should arrive at 4,348,000. This is the value of the additional loan that was acquired during the year in order to fund the acquisition of land. And just for confirmation, let us start with the opening balance, 1,150,000. We will then subtract the repayment of 920,000, and then we will add this amount right here because it represents an additional loan of 4,348,000, and you should arrive at the closing balance of 4,578,000. That is just for confirmation in order to ensure that you have calculated the cash flow correctly. And because this is an additional loan that was acquired, it represents an inflow of cash, so therefore it must be shown as a positive amount in the financing activity section in the proceeds from long-term borrowings line. Okay. Now, from additional information point 2, we know that we have used the new loan in order to fund the acquisition of land. And this additional land was required for expansion purposes as part of the management strategy to grow the business. So in other words, we have used this amount in order to acquire additional land for expansion purposes. All right. So this is the value of additional land acquired. So in your general ledger account for land, you will show on the debit side, because it represents an increase in the value of land, that 4,348,000 was acquired for expansion purposes. Right? And keep in mind that we do not only show it in the general ledger account for land, we also need to show this in the investing activity section as part of the investment to expand production capacity. All right. The reason that why we have included it as part of the general ledger account is to calculate the value of the land that was disposed of. Okay. Remember, you need to include all relevant items in your general ledger accounts. All right. So because this was acquired for expansion purposes, we will show it in this line item right here. Investment to expand production capacity, additions to land, and we have already calculated that amount to be 4,348,000. So as you should notice, these two amounts in the statement of cash flows will in effect cancel each other out. Because in the financing activity section, this is shown as an inflow, and in the investing activity section, we will show it as an outflow. However, it is important for us to indicate the amount at both or in both sections, because this inflow represents proceeds from long-term borrowings. All right, and in the investing activity section, we show this amount in order to illustrate that we have acquired land for expansion purposes. And the value of that land was 4,348,000. And because it was paid or funded, let me just state that correctly, because that loan amount was used in order to acquire the land, we know that this represents an outflow of cash. So therefore, we show it as a negative amount. All right. So even though these two amounts will cancel each other out in the statement of cash flows, you still need to show them or show the amount in both sections. Okay, please remember that. All right. Now that we have done that, we can proceed to calculating the balancing figure. And the balancing figure was the disposal of land. All right. A hectare of land was sold or was also sold during the period under review. That amount has not been provided because it is the balancing figure in the general ledger account for land. Right, so this amount will be calculated, and keep in mind that the balancing figure will be on the credit side of the general ledger account because there was a decrease in the fair value of land due to the disposal. All right, and we will show this disposal at fair value. All right, so this amount will be calculated by taking the opening balance of 1,270,000. We will add the revaluation surplus of 250,000, the additional land that was acquired for expansion purposes, and then we will subtract the closing balance that was also provided of 5,518,000, and this should give you 350,000. So 350,000 is the disposal of land at fair value. All right. Let me just see if a profit was made. There was indeed a profit. Remember, this is a disposal at fair value. It's not necessarily the value of the proceeds. We actually need to calculate the cash flow that occurred on that transaction, right? Or during that transaction. So the disposal or the fair value, or let's say the carrying value of the land that was sold was 350,000. Because this general ledger account is concerned with fair value or carrying value. All right. However, this is not the value of the actual cash flow, because we need to consider the profit that was made on that transaction. Okay. And only once after we have considered the cash or the profit that was made can we actually calculate the correct amount that was received on that transaction. All right. And according to additional information point 5, other income includes the following amounts, and we have a profit on the sale of land amounting to 270,000. Okay, so this amount must be added to the 350,000 in order to calculate the proceeds on sale. So that will be the amount that was received for that particular land. And we will show that in our investing activities section as well. Okay, the proceeds from the sale of land. Okay, we have calculated the fair value or the disposal at fair value to be 350,000, and now we just need to add back the 270,000, which represents the profit that was made on that transaction. If the 270,000 was a loss, you would have subtracted it from the 350,000, because then it means that the land was sold for less than its fair value. In this case, a profit was made, so the amount received exceeded the fair value of 350,000 on the date of sale. And we will show this as a positive amount because it represents an inflow of cash, and this should give you 620,000. So for the purposes of your investing activity section, or for the purpose of drafting your statement of cash flows correctly, we need to consider the profit as well. Okay, we cannot just take 350,000. All right. So 620,000 was received on the date of sale for that particular land. And once again, because we have received that amount, it represents an inflow of cash, and therefore we show it as a positive amount in our investing activities section. All right, so we are done with land. We have also taken the changes in the loan into account, specifically the repayment, as well as the additional land that was acquired. All right. And we have considered the profit on sale of land. Okay. Keep in mind that we are not done with additional information point 1 as yet. We still need to consider plant and machinery. So let's draw up a general ledger account for that item as well. Plant and machinery. So we will follow the exact same process as with the land general ledger account. We will start with the opening balance provided, which was 820,000. Also a debit balance, because it is an asset. It represents an expected inflow of economic benefits in the future. So this is an opening balance for plant and machinery, or the opening balance for plant and machinery, carried down from the previous period. And then we had a closing balance of 1,273,000, which once again was carried down from the credit side. So this is the closing balance. Which was carried down from the credit side. As I've indicated previously, please make sure that you are able to draft your general ledger accounts correctly. Okay. Right, so we are done with additional information point 1 because those are just the totals provided. Now we can move on to additional information point 3, which says the following. Interest on the long-term borrowings do not qualify for capitalization, so the interest amount is not added to the value of the loan. Right? So the interest does not qualify for capitalization because otherwise we would need to consider that in determining the changes in the long-term loan. Okay, but that is not the case in this question. The interest is expensed separately and have been correctly accounted for. Finance charges incurred were also paid during the period. All right. Now, there's no indication under additional information that there was interest payable at the beginning of the year, nor at the end of the year. All right. There is also not information for us to assume that there was interest payable. All right. The only item given under current liabilities will be trade and other payables. All right. And any absence of any further information, we can assume that our trade and other payables only includes our supplier accounts. Or only include our supplier accounts. So for this question, we may assume that there was no interest payable. You will see in additional information point 7 that trade and other payables does include taxation as well as dividends payable. All right. So in this question, it does not only include our supplier accounts, but if there is no other information provided, you may assume that it only consists of your supplier accounts. But normally they will give you the information in additional information. All right. So there was no interest payable at the beginning nor at the end of the year. So in other words, the finance charges as per the statement of profit or loss and other comprehensive income represents the amount that was paid during the year. Okay. So in your operating activity section, we need to show interest paid separately as 250,000. Right. Because the interest was paid, it was an outflow of cash, so we show it as a negative amount. Okay. Once again, the interest does not qualify for capitalization, so we didn't need to consider it in calculating the change in long-term borrowings. All right. Because otherwise, if the interest was capitalized, this amount would be calculated differently. All right. Keep that in mind as well. Okay, so we are done with additional information point 3. There's no further information provided, so we take the amount as disclosed in the statement of profit or loss and other comprehensive income as the amount that was paid for the year. That was the actual cash flow that occurred. Now, according to additional information point 4, as part of management's attempt to enhance efficiency in the business, outdated items, so old items, of plant and machinery were sold during the year or during the period for 175,000. Newer items with better production capabilities were then acquired to replace the items sold. All right. Now, first we need to take note of the plant and machinery that was sold, okay, or were sold. Okay, the amount that was received was 175,000. Okay, so this is the value of the cash flow that occurred in that transaction. So this is the amount that we will disclose in the investing activity section as proceeds from the sale of plant and machinery. All right, so this amount was calculated after taking the profit on sale into account. Okay, keep that in mind when we draft the general ledger account. So in your investing activity section, you need to show that there was proceeds from the sale of plant and machinery that amounted to 175,000. Okay, this amount has been given in additional information point 4. That is the value of the proceeds on sale of plant and machinery. All right. Okay. However, we need to consider the carrying amount of that plant and machinery in the general ledger account for plant and machinery. All right. So in your general ledger account for plant and machinery, you need to show, as with land, the disposal of plant and machinery at carrying amount or fair value. All right. So this amount will be calculated by taking the proceeds on sale, which was 175,000. Okay. And then we need to subtract the profit that was made on the sale of machinery, and that amount is provided in additional information point 5, amounting to 45,000. Because this amount that you calculate, which is 130,000, the 130,000 represents the carrying amount of the plant and machinery that was sold, and this was the carrying amount on the date of sale. And in the general ledger account for plant and machinery, we are concerned with the carrying amounts. Remember that the property, plant and equipment line in the statement of financial position is shown at carrying value or carrying amount. So in this general ledger account, we are concerned with the carrying amounts. All right. So on the credit side, you need to show the 130,000 as a disposal at carrying value. However, in the statement of cash flows, you need to consider the actual cash flow that occurred, which was 175,000, because that is the amount that we have received on that transaction. All right. Okay, think of this as your property, plant and equipment note. Right, that would be another way to understand this process. Okay. Right. So we have calculated the disposal at carrying value, and we need to consider the carrying value because only then will we actually be able to calculate the correct balancing figure for this account. So furthermore, newer items with better production capacities were acquired to replace the items sold. So the additional equipment that was purchased by the company was acquired for replacement purposes. So in other words, it should be part of the investment to maintain production capacity, which you will show as part of your investing activity section. And this amount will be the balancing figure, right? So we will take the closing balance of 1,273,000, this amount right here. Remember that the balancing figure will in this case be on the debit side because there was in addition to plant and machinery, and we need to calculate that amount. All right, so we will take the total of the credit section, right? So we will take the closing balance carried down, add back the disposal at carrying amount, and finally we will subtract the opening balance of 820,000. Okay, just give a moment for Excel to respond. Thank you very much. And this should give you 583,000. All right. Just make sure that I've entered that amount correctly. Yes, I have indeed. So 583,000 was acquired as a replacement of plant and machinery. And we need to show this amount in our statement of cash flows as part of the investment to maintain production capacity. All right, so replacement of plant and machinery was calculated as 583,000. And because we have purchased that plant and machinery, we need to show it as an outflow of cash in that section. Right. Okay, we are done with additional information point 4. We are done with property, plant and equipment. We have considered all the relevant cash flows. So therefore, we should be done with the investing activities section. So this will be the amount or the net cash used in investing activities. Right, 99% of the cases you should have a negative amount for that section. Okay, Let's proceed to additional information point 5, which says the following. Other income includes the following amounts. We have already considered the profits. Okay, the first one being on the sale of land, as well as on the sale of machinery. Okay, those are non-cash flow items that we have already considered in determining the correct cash flows for those two items. Okay, and then we have dividends received, right? And once again, in the absence of any further information, we can assume that this was the actual cash flow that occurred in terms of dividends received. Dividends receivable is not shown separately under current assets, and there's no indication that it is included in trade and other receivables. So therefore, we will take the amount of 80,000 Rand as the actual cash flow that occurred as dividends received, and this will be shown in the operating activity section as an inflow. And then we have interest received. Okay, same case. There's no indication that the interest was receivable at the beginning or at the end of the year. So therefore, we will take this one as the closing balance or the actual cash flow that occurred during the year. So interest received, 55,000. And because it was received, it will be shown as an inflow. All right. Now, these should be the only items part of other income. And just for confirmation, let us add all those amounts together. You should arrive at 450,000, okay, for other income. And this is the amount shown in the statement of profit or loss and other comprehensive income. Okay, so these are the only items included in other income. All right, just for confirmation. All right. Let's proceed to additional information point 6, which says the following. Now, included in other expenses, so part of this amount right here, which is 1,750,000, is a provision for credit losses of 10,000 Rand. All right. No provision for credit losses existed in the prior year. Okay. So the journal entry that was made in order to provide for credit losses was that we have debited credit losses by 10,000. Remember that credit losses is an expense item which will be part of other expenses. That is why they say that the provision is included in other expenses. So we have debited credit losses by 10,000 because there was no opening balance for provision for credit losses or allowance for credit losses, right? So the increase in that allowance was 10,000. Okay, so we have debited credit losses. And then we have credited allowance for credit losses with the same amount, 10,000. And as you should know, the allowance for credit losses is subtracted from the trade and other receivables balance, all right, in order to reflect the net trade and other receivables amount. So these two amounts right here are the net amounts for trade and other receivables. So after the allowance for credit losses has been taken into account, so please remember that when we are going to draft the general ledger account for trade and other receivables. Okay, let us do that while we're at it. So let us make a general ledger account for trade and other receivables. Okay, keep in mind once again, as I've said previously, that these amounts are shown as the net amounts. So after the allowance for credit losses has been considered. So if we look at the opening balance for trade and other receivables, it is given as 1.2 million. All right. And according to additional information point 6, there was no provision for credit losses in the prior year. So in other words, the allowance for credit losses at the beginning of the year was 0. So the opening balance is still shown as 1.2 million. Right. Opening balance on the debit side, because we are dealing with an asset. And then we had a closing balance of 2.2 million Rand. All right. Now, for the purpose, remember we are using the direct method in order to represent our operating activity section or the cash generated from operations section. So we need to calculate the change in trade and other receivables, or rather, we need to consider the actual cash flow that occurred for trade and other receivables. And we can only do that once we have eliminated or taken into account the non-cash flow items. Okay, what I'm trying to say here is that the allowance for credit losses is not a cash flow item. All right, so we need to add back that allowance in order to determine the actual cash flow for trade and other receivables that occurred during the year. Okay, so we will do that by taking the closing balance for trade and other receivables amounting to 2.2 million, and then we need to add back the allowance of 10,000. All right, so we will add back the allowance for credit losses amounting to 10,000. All right, and this should give you logically 2,210,000. Okay, remember the reason why we are doing this is because we want to calculate the correct amount of cash flow that occurred in terms of trade and other receivables. And we can only do that once we have taken all the relevant items into account. We need to add back the allowance for credit losses because this amount is shown as a net amount after the allowance has been subtracted. All right, and there was no allowance for credit losses in the previous year. And this allowance was carried down from the credit side, as was the case with the previous two general ledger accounts. All right. So we are not completely done with that one. And other expenses also include the following balances. And thank goodness I've come across this point. So we need to amend our plant and machinery general ledger account. Okay, remember I did that on purpose because I normally work through each point and finish that point. Okay, and once I've come across new information, as in this case, I will just go back and amend those calculations. So what I mean by this is in terms of the depreciation item, okay, we have not considered this amount in our general ledger account for plant and machinery. All right, so we do need to consider that amount because it forms part of the general ledger account for plant and machinery, and this will be shown on the credit side. So in your general ledger account for plant and machinery, you need to add the 45,000 of depreciation on the credit side because that represents a decrease in the value of plant and machinery. All right, so the replacement amount must be modified. That's what I'm trying to say here. So the 583,000 is not actually the correct amount. We need to amend this amount because we did not take the depreciation into account. All right, so once again, we will start with the balance carried down, add depreciation, add the disposal at carrying amount, and then we will subtract the opening balance. So the actual replacement value of plant and machinery was 628,000. Okay, please take note of this. Right, when we calculated the original amount of 583,000, we have not yet considered the depreciation expense, and we have come across that item in additional information 0.6. So we have to modify our calculation. So this is the correct cash flow because otherwise, if you do not take the depreciation into account, your statement of cash flows will not balance. So in other words, we will not arrive at the amount of 1.3 million rand because we have forgotten to take the depreciation into account with reference to plant and machinery. Keep in mind that the depreciation expense only relates to plant and machinery. All right. So in our statement of cash flows, we need to change this amount to 628,000. Right. Please, once you come across new information that you did not take into account, you need to consider that. Another technique that you can follow is, for example, if you are working with plant and machinery, look for every item under additional information that relates to plant and machinery. So if you have started with point 1, you are busy drawing up the plant and machinery general ledger account, and while you are busy with that account, look for the depreciation expense under additional information. Okay, I did not do that because once again I did it on purpose to show you that you have to take everything into account. Okay, once you are done with a certain point under additional information, you need to consider new information that you come across. In this case, in additional information point 6, I have noticed that we have a depreciation expense that we have not considered in calculating this amount right here. So we need to modify that calculation as well. Right, very important that you listen carefully to that explanation. All right, so we have depreciation of 145, which is also a non-cash flow item, all right, which we will consider in a moment. And then we have impairment on financial assets. All right, now there is no other information provided regarding financial assets, except for the fact that we know that that the financial assets are held for short-term profit making. So in other words, if they are held for trading purposes, we will need to show the relevant cash flows in the operating activity section. All right. If they are not held for trading purposes, they will be shown in the investing activity section. All right, that is the difference. The impairment amounts to 8,000 Rand and needs to be considered in calculating the cash flow for financial assets. All right. If we look at our statement of financial position, we are given the financial assets at fair value through profit or loss. And from the looks of it, there was an increase from last year, which means that there was an acquisition of additional financial assets for the purpose of trading. All right. So in our operating activity section, we will show the acquisition of financial assets at fair value through profit or loss. They are held for trading. So we will work in reverse, starting with the closing balance of 1 million Rand. We need to add back the impairment losses of 8,000 that was given in additional information point 6. All right, and then we need to subtract the opening balance of 450,000. So minus 450,000. This will give you the actual cash flow that occurred in terms of financial assets. And that amount is 558,000. And because it represents an outflow of cash, this must be shown as a negative amount because additional financial assets were purchased during the year. Okay, just for confirmation, we can start with the opening balance of 450,000. We add the additional financial assets of 558, and then we subtract the impairment losses of 8,000. This will give you the closing balance of 1 million Rand. Okay, that is just for confirmation purposes. All right, we are done with additional information point 6. So let us go to additional information point 7. All right, now before we get to additional information point 7, let us just make a quick calculation. Remember, we are using the direct method. So part of the cash paid to suppliers and employees will be your expenses paid. All right. And this amount will be calculated by taking the total value for other expenses, which is 1,750,000. And then we need to remove all the items that are included in that amount that are non-cash flow expenses. In this case, it was firstly the impairment losses on financial assets amounting to 8,000, as well as a depreciation expense of 145. Okay, those two are non-cash flow items, as well as the credit losses, or the increase in the allowance for credit losses of 10,000. Okay, that is also a non-cash flow item that is included in other expenses. And for the purpose of calculating the amount paid for other expenses, we need to take the amount disclosed in the statement of profit or loss and other comprehensive income and we need to remove all the non-cash flow expenses. So firstly, the impairment losses on financial assets, depreciation expense, as well as the increase in allowance for credit losses. Right. Now we can move to the additional information point 7, which says the following. Now, trade and other payables, as disclosed under current liabilities, comprises of the following balances amongst others. Okay, so let's first deal with taxation payable. All right. So how do we calculate the amount for tax, or the amount paid for tax? We will take the opening balance payable, which is 55,000. Right. So this was the amount payable at the beginning of the year. We will add the income tax expense that was disclosed in the statement of profit or loss and other comprehensive income. Right, 1,152,000. And then we will need to subtract the taxation payable at year end, which is 80,000. All right, so this will give you the value of tax paid. Just another point that I want to emphasize, as with any other question in FAC2602, it's very important for you to show all your calculations. Right, in order for you to help avoid losing unnecessary marks or to lose marks unnecessarily. All right, so this is the amount of tax paid for the current year. It must be shown as an outflow, 1,127,000. Then we have dividends payable. All right. Now, more information on the dividends declared is given in additional information point 8. However, I will show you an alternative method for calculating the value of dividends declared. All right. Because in order to calculate the dividends paid, you will need to take the opening balance of dividends payable. You will add the total dividends declared during the current year, and you will need to subtract the closing balance of 7,000. All right, so let me show you the first method to calculate the dividends declared, which is by referring to additional information point 8, which says the following. Now, on the 1st of October 2021, so at the beginning of the year, there were 100,000 ordinary shares in issue. Okay, so share capital at the beginning of the year consisted of 100,000 ordinary shares, valuing 500,000 Rand. Now, on the 30th of June 2022, which is during the current year, a further 150,000 ordinary shares were issued at 3 Rand per share. All right, let us first address that. Remember, shares were issued, which means that a cash flow occurred. So therefore, we must show this in the financing activities section. So proceeds from the issue of shares will be calculated by taking the number of ordinary shares issued, which is 150,000, and you will multiply that by 3 because the shares were issued at 3 Rand each, and you should arrive at 450,000. All right, another way of calculating this is by looking at your given balances for share capital. The closing balance for share capital is 950,000. The opening balance was 500,000. So there was a change, more specifically an increase of 450,000. So that is just confirmation that we have calculated that amount correctly. All right. So that is the value of the additional shares issued, which we have shown in the financing activities section as an inflow. Right. Then an interim ordinary dividend of 10 cents per share was declared and paid on the 30th of July 2022, and at year end the board of directors approved the payment for a final dividend of 20 cents per share. Okay, so firstly, the interim dividend relates to 250,000 ordinary shares. All right, because this dividend was declared after the additional 150,000 ordinary shares were issued. All right, so the interim dividend is calculated by taking 10 cents per share, which is just 0.1, and multiplying it by 250,000. All right. So in calculating the dividends paid for the current year, we will start with the opening balance of 3,000. All right. Then we had an interim dividend declared. All right, which was 10 cents per share, and the interim dividend was declared for 250,000 ordinary shares. Okay, the 100,000 at the beginning as well as the additional 150. All right, it was also paid during the year, and at year end, the board of directors approved the payment for a final dividend of 20 cents per share. So this was the interim dividend. We also have a final dividend of 20 cents per share. So these two amounts will give you the total dividends declared for the current year. And finally, we will subtract the closing balance of dividends payable of 7,000. All right. So the amount of dividends paid for the current year amounts to 71,000. All right, so 71,000 is the value of dividends paid during the current year. All right, now the second method for calculating the value of dividends declared, let me use the land general ledger account, is by using the retained earnings account. All right. Okay, so if we look at our retained earnings balance for the beginning of the year, it was 2,165,000. So credit balance was 2,165. Okay, remember this will be a credit balance. And then we had a closing balance of 6,588,000. 6,588,000. Which was the closing balance carried down from the debit side. 6588. All right. Now, the second item that we consider, apart from the balances, will be the profit before tax. All right. And now, rather the profit after tax, the profit after tax. And this amount was given as 4,498,000. So 4498 was the profit after tax, which would have increased the retained earnings account. All right. And now we just need to calculate the balancing figure because that will represent dividends declared. And this will be done by taking the sum of the credit section, which is 2,165,000. We will add the profit of 4498, and then we will subtract the closing balance carried down of 6588,000. This will give you the total value of dividends declared. So in other words, if you calculate the value of these two, it should give you 75,000. All right. Let me just make sure that I've calculated this. And it is indeed 75,000. Right. So that is just an alternative method for calculating the value of dividends declared. Remember, this is not necessarily the dividends paid amount. This is just the amount that was declared during the current year, which you can use as part of your calculation right here, apart from the additional information that was provided. Okay, you can use that as final confirmation. So we have calculated this amount correctly. All right, we have also considered the change in share capital in the financing activity section. So we are done with that. And we are done with dividends payable. So now we are done with all the points on additional information. So we just need to calculate the cash generated from operations section. Let's first deal with our cash receipts from customers. We have already started drafting the trade and other receivables general ledger account. All right. Keep in mind once again that we have added back the allowance for credit losses for the purpose of calculating the correct amount of cash received. All right. The important item in this general ledger account that we need to consider will be revenue, right, which would have increased the value of trade and other receivables, amounting to 9,250,000. So this was revenue for the year. So according to this assumption, all sales are made on credit. Okay. So the balancing figure on the credit side will give you the amount of cash received from customers. All right. So the balancing figure will be 1.2 million, add revenue of 9.25 million, and then we will subtract the closing balance. Okay, before the allowance for credit losses was considered, and this should give you 8,240,000. So 8,240,000 represents receipts from customers. So you will show that amount as a cash receipts from customers as an inflow of cash. 8,240,000. Okay, very easy. All right, trade and other receivables. And now we just need to deal with our trade and other payables. So let me just replace this one with trade and other payables. And remember that this general ledger account will only consist of your supplier accounts. So we need to remove the balances for taxation and dividends payable. All right. So our opening balance for trade and other payables, only consisting of our supplier accounts, will be calculated by taking the opening balance for trade and other payables, which is 850,000. And then we need to remove the opening balance for taxation payable, which was 55,000. And we also need to remove the opening balance for dividends payable because it is part of the 850,000. Right. So the opening balance for the trade and other payables general ledger account suppliers only is 792,000. Okay, credit balance. And we need to do the same or follow the same procedure in calculating the closing balance. Right, we will take the total of 1.1 million rand. And then we need to remove 80,000 as well as the 7,000. Okay, this will give you 1,013,000. Okay, 1,013,000 is the closing balance, which was once again carried down from the debit side. All right. Now, the second amount that we need to determine is the value of inventory purchased from your suppliers. Okay, and we can only do that by drafting the inventory general ledger account. So I will do that right here. So in terms of our inventory balances, we are given an opening balance of 750,000. Debit balance. Right, let me just wrap the text. And we are given a closing balance of 2 million rand. So this was the closing balance for inventory. Which was carried down from the credit side. All right. Now, in our inventory general ledger account, we need to consider cost of sales. So the transfer to cost of sales. This amount should be given in the extract of the statement of profit or loss and other comprehensive income, and it is given as 2,050,000. So 2,050,000 has been transferred to cost of sales. causing a decrease in the value of inventory on hand. So the balancing figure will represent the amount of inventory purchased from our suppliers. Okay, so we will take cost of sales, add the closing balance of 2 million, and subtract the opening balance of 750. This should give you 3.3 million rand. So this was the value of purchases from our suppliers. Right? So it is shown on the debit side in the inventory general ledger account, which means that we have credited trade and other payables, suppliers only. So we will show it right here. 3.3 million inventory purchased. Okay, that would have increased the value of your supplier accounts. So the balancing figure will give us the value or the amount that was paid to our suppliers, or in terms of our supplier accounts. Right, so we will do that by taking the opening balance of 792. We add the inventory purchases of 3.3 million, and finally we will subtract the balance carried down, and that should give us 3,079,000, which is the cash flow that occurred in terms of our supplier accounts. So in your cash paid to suppliers and employees line, you will need to add 3,079,000, which we have calculated in our general ledger account. Right? So 3,079,000, and we have already considered the other expenses after removing the non-cash flow expenses. Okay, let me just wait for a moment for Excel to respond. So total cash paid to our suppliers and employees amounts to 4,666,000. And we are 100,000 out. Okay. Let me just make sure that I have calculated everything correctly. Well, let me just check my memo real quick. Because I have drafted that statement in full. You see why I say it's important for you to actually calculate each amount correctly. Okay, let me just have a look here. So, it is plant and machinery that is out by 100,000. Okay, it should be 728,000. Okay, let me just go back here. Let us just redraft the plant and machinery general ledger account. Sorry guys, I apologize for that. So we are given the plant and machinery opening balance of 820. Right. We had a closing balance of 1,273,000, which was carried down from the credit side. And remember that this is shown at carrying amount. Right. We also considered the depreciation expense of 145, which was given in the additional information 0.6. Then we have calculated the disposal at carrying amount, which was done by taking the proceeds of 175 and subtracting the profit that was made. So that should give us 130,000. Disposal at carrying amount. Right. So the replacement value is calculated by taking 1,273,000, add back the disposal at carrying amount, 145, and then we will subtract the opening balance of 820. Okay, that is the correct amount. Okay, it's just a calculation error that I've made. I apologize for that. It should be 728. All right, so 728,000 is the value of the replacement of plant and machinery. Okay, once again, ladies and gentlemen, I apologize for that. Please make sure that you do not make these kinds of mistakes. But as you see, I too can make mistakes, so do not feel excluded or alone in that regard. Which is why I emphasize that it's important for you to make sure that you focus while doing your calculations. Alright, so after you have drafted the statement of cash flows, you should arrive at an amount of 1.3 million as the net increase in cash and cash equivalents, which we have determined to be the correct amount at the beginning. So once you are done with this question, this is what your cash flow question or the statement of cash flows should look like. All right. Net cash from operating activities is 1,703,000. Net cash used in investing activities 4,281,000. And finally, the cash flow from financing activities is 3,878,000, giving you a net increase of 1.3 million, which we have calculated at the beginning. All right, this concludes our lesson for today. In the next lesson, I will start with the October 2021 examination. I have uploaded a set of suggested solutions for that paper on the Telegram group, so please go have a look at that as well. So the next question or the next lesson will cover question 1 in that exam or of that exam paper, which addresses the pro forma consolidation journal entries, and after that we will work through the group financial statement question. So this is a statement of cash flows question covering or using the direct method. Please once again keep in mind that in the examination you only draft these 2 sections or the sections that are asked in that question. You do not need to draft the entire statement of cash flows because otherwise you will not finish in time. Okay, I'll see you next